Welcome back to our Global Business Report here on Arise News. Lending to manufacturing companies in Nigeria from May to the end of October totaled about $1.3 billion, and the most in 2 decades. Meanwhile, the Nigerian Central Bank left its benchmark lending rate on hold at 13.5% after its meeting on Tuesday, following data that showed inflation struck a 17-month high last month. Central Bank Governor Godwin Emefiele told a news conference in Abuja, Nigeria's capital, and the decision by the Monetary Policy Committee was unanimous. Amakode was there.
Statistics. Nigeria's inflation rate rose to its highest in 8 months, hitting 11.61% as the country continues to short its land borders against neighboring countries. But the Monetary Policy Committee believes leaving the MPR at 13.5% will protect the price of goods and services.
The Monetary Policy Committee reviewed the upsides and the downsides of the options to tighten, hold, or to loosen. It was conscious that while tightening may encourage capital flows, it also has the downside consequence of stifling of the already nascent recovery in output growth. The committee also noted that a reduction in policy rate will improve growth prospects, but in view of the uptick in inflationary pressures, it decided that the balance of risk was in favor of protecting price stability.
The governor says the recent increase of the loan-to-deposit ratio to 65% is yielding the desired results, especially for farmers who are getting loans to improve their output.
Current policy on loan-to-deposit ratio, which has resulted in loans and advances rising by over 1.1 trillion naira between June to October 2019. It further noted that these actions have assisted in boosting credit to the agricultural and manufacturing sectors, hence the positive outcome on the gross domestic product.
As the Central Bank of Nigeria retains the monetary policy rate at 13.5%, patience is what the CBN is asking for because it believes that the border closure will benefit all Nigerians and the price inflation currently being experienced in the country is only temporary. Amaka Ude, Arise News.
And away from there, joining me in the studio to discuss the domestic and commodities market is Adim Okwesa, an associate analyst at Financial Derivatives Limited. Adim, it's good to have you. Morning.
Thank you.
All right, now let's take a look first at agricultural commodities. What's the current scenario like for crops like wheat, corn, cocoa, sugar? What do you make of that scenario?
In the cocoa space, what's happening there is very interesting. Cocoa prices rose to a 18-month high. Last week. What's surprising there is that this is the harvest season. This is the main harvest season, which in itself means increased supply, which should push down prices. But the opposite effect is happening. We're seeing prices inch up higher, mainly because of strong demand. There's been an increase in demand, particularly in the Southeast Asia region. I mean, Mondelez International, the owner of the Cadbury and Toblerone chocolate brands, reported an average sales growth of 36% in the past 3 years and expects sales to expand by 40% in 2019. So strong demand in Southeast Asia combined with expectations of even more stronger demand in 2020, the late half of 2019, is pushing up prices now. So that is very important. And because cocoa is Nigeria's 4th largest source of foreign exchange. So the higher the price of cocoa, the better it is for our current account balance and our economy overall. And also for the Nigerian farmers because they earn the most from this. They earn the least from higher cocoa prices. So
I was going to ask you about the value chain like for crops like cocoa in Nigeria. What do you make of that development? You also mentioned corn, and wheat as well. Yes, we have our own versions as well. But what's the production like?
In terms of wheat and corn, Nigeria is a net importer. We produce about less than 1 million tons of both wheat and corn, which is much. Very paltry. So we have to import about 1 billion, 1.5 billion tons, one total value of $1 billion worth of wheat every year. So what is happening in the grain space? Also, prices are inching up higher, mainly because of the harvest. The harvest in the U.S. is going at a very slow pace because of heavy snow in the northern parts of the region. States like North Dakota, South Dakota, Michigan, Minnesota. Heavy snow is preventing farmers from completing their harvest.
Okay.
As of Sunday, the harvest rate was 86% completed, which is the slowest pace in a decade. So that is what is pushing up prices higher. There's also the U.S. trade talks, U.S. China trade talks. Yes,
that's been lingering. It's been affecting so many.
One of the U.S. demands is that one of the U.S. trade demands that China should buy about 1 million tons of soybeans and other grains, mostly soybeans. So there are hopes that a trade deal will be signed before December 15th. So, but the outlook has turned from sour to positive. So we're taking it with a pinch of salt. But markets are expecting that a trade deal will be signed before the phase 1 trade deal will be signed for December 15th, and that would include China buying a large bulk of U.S. grains. Yeah, so that is what is pushing grains higher.
Hopefully they'll make that deal happen because there's so much uncertainty all over the place.
Yes, but Nigeria is the main importer of wheat, so the higher the wheat, the price of grains, the worse it is for import bill and our current account balance. So we have two counterbalancing effects: higher imports from higher prices of wheat and corn, but also higher foreign exchange receipts from the higher price of cocoa.
Very good. Still talking about Nigeria, just like your thoughts on this generally. The CBN has invested heavily in the agricultural production, but are we seeing the impact? We have the Anchors, Boras concept and so many others like that. Also interventions in the cotton industry. So is that generating more confidence in the sector, as it were?
Yeah, you can say that from looking at the GDP numbers, the agricultural sector expanded faster than Q2-19 and also Q3-18. So you can see that the CBN interventionist program is having its desired effect, but it's still growing at a very slow pace. I mean, 2000 to 2010, the agricultural sector, non-oil sector was growing at over 8%, but now it's growing at a sluggish pace. Mainly because of the factors that are constricting growth, because of, let's say, the unrest in the food growing belt of the region is still a major constraining factor. Also, the challenge of low yields, low agricultural yields, which the CBN is trying to tackle. But that and also concerns of land ownership rights, different challenges involving land ownership rights is constraining the sector. So that is what is constraining the agricultural sector. But the CBN is trying to diversify the economy by intervening in the markets, giving loans to farmers at low interest rates, and it's having a positive effect, but a sluggish effect still.
Bothered on optimism, as it were. All right, Adam, so your outlook to wrap up the agricultural prices issue. So what do you make of it, your outlook for the rest of the days?
Yeah, the price of wheat and corn, we expect prices should continue to rise higher because it looks like the harvest will be delayed till 2020. So that should tighten supply and which should push up prices. Cocoa, I think the rally would halt sometime this week or next week because Ivory Coast, Ghana, the two major cocoa producers in the world, are forecast to harvest record tons of cocoa this year. So that higher supply should push down prices.
All right, let's go to all markets here. So what are the current narratives and Nigeria's output as well? What do you make of that scenario?
Yes, Nigeria's output, we're still abiding to OPEC's quota agreement. So, but attention is slowly shifting to the OPEC meeting, which is December 5th, December 6th.
Lots of expectation there.
Yes. But what is surprising that we're rarely seeing signals from OPEC about a desire to cut output. By this time of the year, we should be hearing signals from the major OPEC players of what they intend to do. But this time around, little or no signals. I think that is mainly because we're seeing political unrest in major OPEC producers. Iraq and Iran are the prime examples, but also Algeria. Tensions are still high in Algeria from the ousting of Abdulaziz Bouteflika. Libya too is also a problem. Ecuador they're also unrest. So there's this feeling that this unrest might disrupt supply in those OPEC producing countries. So maybe that is why OPEC is just maintaining a wait-and-see approach.
And we saw what happened with Saudi Arabia after the attacks not too long ago.
Yes, exactly. So maybe OPEC would not exempt Nigeria because of the prospect of supply disruptions in these countries I just mentioned. So if we are abiding from we are stipulated to abide by the OPEC agreement, that means we would produce lower production, and that would affect our overall oil output. Yes.
Very good. Now, in view of the scenario you've just explained, is Nigeria's benchmark for crude still in line with the expectations on global pricing?
Yes, indeed. We have a very conservative oil price, $55 per barrel. I think $50 to $55 per barrel, which is in line with the general consensus. I think markets expect oil prices to average in $55 to $65 range in 2020, which is, although we're saying we don't know if the recession would come into 2020, which would naturally affect oil demand. But consensus is that oil prices would average between $55 and $65 per barrel in 2020, which is in line with our oil price benchmark for the 2020 budget. So I think we're in a very comfortable position.
Very good. And still talking about the U.S. China imbroglio, how has that also affected the fortunes of the oil market?
Yes. Just like other commodities, the sentiment is shifting from positive one day to sour one day. I think last week or earlier this week, I think China made some significant headway in meeting U.S. trade demands. I think it announced plans to reform its intellectual property framework, which was a major bone of contention in those trade talks. So if China announces significant material results in that area, then definitely a trade deal will be signed, which would lift sentiment, which would lift not only commodity markets, but also equities markets, all financial markets, and that should push up the price of oil significantly.
Very good. And your outlook finally, briefly on, that thought?
It's all linked to this U.S. China trade deal, really fair. I think if a trade deal is signed, then prices should lift closer to that $65 per barrel, maybe even closer to $70 per barrel. That is the hope for us being an oil-producing nation. Yeah,
what are even the prospect of the oil price actually reaching $70 per barrel, just like you mentioned?
It's a very remote possibility, to be honest. But I think $65 is the more realistic price we should see at the close of 2019. Yes, but and also OPEC's move, whatever OPEC announces, if they announce deeper production cuts, maybe that is what will lift prices towards that $70 per barrel.
Very good. Adim Okwesa, Financial Derivatives Limited. Many thanks for your input on that.
Thank you.
Good to have you.
Thank you.